The subject of our today's discussion is demonetization. Every day we hear so many opposition leaders saying this demonetization is anti-poor move by the government. We hear Prime Minister and Finance Minister and other ministers saying this is to remove corruption, this is to achieve so many good things for the country. So let us try to know what are the objectives behind this move. The first and foremost is to make this tented or unaccounted money of zero value. Friends, total currency in circulation in our country is 17.77 lakhs crores, out of which nearly 14 lakhs crores are in ST notes. It is estimated by economists that about 3 lakhs crores may not be exchanged, and then that will become surplus for the Reserve Bank of India and in final analysis for the Government of India. The second objective to my mind is to usher in clean and transparent economy. There is a parallel economy in our country, there is a black money. So in order to curb this black money, it has been decided by the government these notes should be demonetized so that clean and transparent economy takes place in our country. There are many people who have earned the money in black and kept in safe deposit lockers for years together. That money is lying dormant. So another objective is to bring dormant currency into circulation so that that money could be used for productive purposes. Then the holders of these high denomination notes, even if they are not able to explain, they will be tempted to deposit these notes in their bank accounts. And once these notes are deposited, the intimation will reach Income Tax Department, there will be inquiry, this deposit will be subjected to tax and maybe penalty and may be liable for penalty and prosecution. The unaccounted money thus deposited in banks will generate additional revenue for the government. Apart from black money, there is a counterfeit currency also in our country. Once the scheme is over, such counterfeit currency, these fake notes will go out of the circulation, it will be eliminated altogether. We also know that terrorist activities, smuggling and narcotic drugs are funded by this black money or fake currency. Now this move is expected to control terrorist activities, smuggling and narcotic drugs. The black money is widely used for political purposes. The purchase and sale of MLAs, MPs takes place because of the black money. Now, once this money is out of the circulation, I think people will not be able to use black. Then this white money people will not be able to spend like this. So this will prevent use of black money for political activities. What are the Indian conditions at present? Nobody will deny that parallel economy is prevailing in our country. Over the years, parallel economy has grown in size and dimension. The World Bank has estimated the parallel economy in India at more than 20% of the official economy, which is a very dangerous sign. Apart from black money in India, many wealthy people have stashed earned income abroad and stashed money and foreign assets abroad. several estimates have been made according to which trillions of dollars are stashed abroad. Government had opened a window scheme from 1st July 2015 to 30th September 2015 for declaration of money stashed abroad. But unfortunately, it resulted in very poor disclosure of 3,770 crores, which means government was able to earn the revenue of 2,262 crores only. The expectation of the government was very high. It could not meet the expectation. After the end of this Black Money Act, which for giving window for declaring that foreign asset and income, the government came out with another scheme, unaccounted money within India. So this government announced income declaration scheme 2016, in which 67,000 crores was declared, which resulted in revenue of more than 30,000 crores for the government. Now, we all know there are several terrorist activities are going on across the border, especially near Jammu and Kashmir area, and these activities are funded by such black money or such tainted money, fake money. And this fake money is coming in circulation from across the border. It is estimated that currency of the order of 400 crores is in circulation in our country. As I said earlier, use of large unaccounted funds in elections. Every MP, maximum that he can spend is 70 lakhs. And every MLA can spend maximum 28 lakhs, depending upon the population, states, etc. But everybody knows these limits are crossed. Instead of 70 lakhs, some of the MPs spend 10 crores, 15 crores. MLAs also spend, instead of 28 lakhs, crores of rupees in there for the purpose of winning the election. It has become a big gamble. Social evils are also caused because of the black money. Rich people, those who are having black money, they have extravagant marriages, conspicuous consumption and vulgar display of wealth takes place, and the birth celebration and celebration of marriages. And once black money is vanished, automatically this vulgar display of wealth will also be considerably reduced. Rampant corruption, you cannot get any document registered, you cannot get any municipal permission. This is what is said in the newspaper, that you cannot get any commencement certificate from municipal corporation, you cannot get occupation completion certificate without greasing these government officials, municipal officials. So rampant corruption takes place because of black money. If there is no black money, corruption will come down considerably. So what are the steps taken by the present government? Friends, Mr. Ram Jethmalani was a very learned criminal, well-known criminal lawyer of the country. He had filed a writ petition asking government of India to declare the names of all those who have kept money abroad, assets abroad in foreign banks. Ultimately, the government did not cooperate at that time. UPA government headed by Dr. Manmohan Singh did not cooperate with the Supreme Court. Supreme Court had to pass an order constituting special investigation team for this purpose to find out how much money is lying abroad, who owns that money, and that order was given by the government, by Supreme Court in 2011. Up to 2014, 3 years, central government did not do anything to constitute SIT. The first cabinet meeting, in the very first cabinet meeting of this government, they decided to constitute the SIT for the purpose as per the order of Supreme Court in the writ petition, and it was constituted under the chairmanship of Mr. M.B. Shah, Justice M.B. Shah as the chair, and there are other heads of the departments like IB, RAW, Enforcement Directorate, RBI, Central Board of Direct Taxes. Those members, those chairmen of various boards, etc., will also become the members, have become the members of this SIT. So this is the first action which was taken by the new government headed by Narendra Modi, Honorable Shri Narendra Modi ji, in the first cabinet meeting. So that means the immediate steps were taken, people are not aware of it. Then we also know there were treaties with, we are having double tax avoidance agreements with various countries. Some of the countries are given little favorable treatment like Mauritius, Cyprus, Singapore. Now let me tell you what is this double DTA, double tax avoidance agreements. A person may earn income in two countries. It may be taxed in both the countries. So that's why how to tax the income earned by the person who has got residence, who has got activities in both the countries, which company is registered in one country. So then there is double tax avoidance agreements. Now if a company is registered in one country and has activities in other country, how to tax that country? So these treaties, most of these treaties with Mauritius, Cyprus and Singapore provide that they will be taxed on the capital gains will be taxed by the country, taxed in the country in which the company is registered, place of residence. Now in Mauritius, if there is a capital gain, capital gains takes place in the company having activities in India, but company is registered in Mauritius. So it will be taxed in Mauritius. But according to local Mauritius laws, capital gains tax is not there. So the company escapes tax in India and Mauritius. So the government renegotiated these treaties. Its steps were have been taken to renegotiate Singapore, so that unnecessarily wastage income tax, government is not losing the revenue which belongs to it. Then there are treaties with other countries for exchange of information. Whatever income is being earned in those countries by Indian national, that will come to us soon. Full information will come to this country in course of time. Now friends, you know we have to quote PAN number for various transactions, and we have to apply PAN number under section 139A of the Income Tax Act. As per section 9, as per rule 114B, every person has to quote PAN number on various transactions. Like at present, transaction is any sale and purchase of immovable property exceeding market value of 5 lakhs as determined by ready reckoner. You have to quote your PAN number. If you pay cash bill to any hotel exceeding 50,000, you have to quote your PAN number. If you purchase goods exceeding 2 lakhs like jewelry, etc., you have to quote your PAN number. So these are the existing provision. On 7th November 2016, one day before this demonetization law came, government amended income tax rules. Now, as per the amended rule 114B, if we deposit cash exceeding 50,000 in any one day in any bank account, the depositor will have to give his PAN number to the bank. Moreover, if the aggregate deposits between 9th November 2016 and 30th December 2016 exceed 2.5 lakhs, the person depositor will have to give his PAN number. In most of the big cities, those who are having saving bank accounts, current accounts, have already given their PAN number to the bank. So I don't think this amendment materially changes the position. But those who are not given PAN for opening bank accounts, they have to be careful about this amendment. There is another section 114E as per section 285BA, which relates to collection of data relating to large transaction. Under this section 285BA read with rule 114E, many institutions, persons have to furnish statement of financial transactions to income tax department, like cash deposits of 10 lakhs in saving bank accounts during the year, transaction in immovable property having a market value of 30 lakhs. This is to be reported by IGR to income tax department. Receipt of cash payment of goods sold exceeding 2 lakhs. Now, this is an already existing rule. What is important is, again, this rule has been amended with effect from 7th November 2016. Now, cash deposits between 9th November 2016 and 30th December 2016 in one or more of current accounts of the amount of 12 lakhs 50,000 or more will have to be reported by the banks to income tax department. Another important amendment: cash deposits between 9th November and 30th December in saving bank accounts or post office accounts aggregating to 2.5 lakhs will have to be informed to the income tax department. Friends, as I said, Black Money Act for money stashed abroad was also there for 3 months with compliance window for 3 months between July 15 to September 15, where 3,770 crores was declared and 2,262 crores was collected. Income declaration scheme, which was there from 1st June 2016 to 30th September 16, people declared 67,000 crores and government got the revenue of 30,150 crores. GST Act is expected from 1st April. This will also be useful in curbing unaccounted transaction. Benami Properties Act also amended. Now, if you declare your cash in the name of your servant or poor relative, government can confiscate that amount under the Benami Properties Act. Now, the last step which we are discussing is the demonetization, which government took decision, which is on with effect from 9th November 2016. Friends, if I give you historical background, in 1945, British government had also demonetized 1,000 rupees notes and 10,000 rupees note. In 1978, when Morarji Desai was Prime Minister, notes of 1,000, 5,000, 10,000 were also demonetized. And another Gujarati Prime Minister now, Narendra Modi ji, he has also demonetized high denomination notes of 500 and 1,000 rupees, which ceased to be legal tender with effect from 9th November 2016. And what are the features of currency demonetization announced by the government? This 1,000 rupees note and 500 currency notes ceased to be legal tender with effect from 9th November 2016. Now, these notes can be deposited in bank accounts from 10th November to 30th December and thereafter the procedure has to be followed up with the Reserve Bank of India for up to March. Withdrawal can be made up to 24,000 every week from saving bank account. Withdrawal can also be made of 50,000 rupees from current accounts. Farmers can withdraw up to 25,000 per week. Traders in local farm markets can withdraw up to 50,000 a week. Rupees 2,50,000 can be withdrawn for each marriage. Group C central government employees can withdraw up to 10,000 as advance salary, which can be adjusted in salary payable for November. Demonetized notes can be exchanged for new notes subject to maximum rupees 2,000 per person. Earlier this amount was 4,000, which was raised to 4,500. This measure was actually available as a one-time conversion facility, but it has been already misused by many people. Money can be withdrawn from ATM to the extent of 2,500 per day. Organization providing essential services like government hospitals, petrol pumps, chemists are permitted to accept old notes up to 24th November 2016. This date may be extended for a week or so. No toll tax to be charged on highways and no parking charges on airports up to specific dates. It is also decided by the government that some of the petrol pumps will be authorized to disburse rupees 2,000 per day per person in near future. I think while depositing these notes in the banks, everybody is concerned about the tax provisions, how the tax department will treat these tax deposits of high HD notes in the banks. So let us learn what are the tax provisions. Under section 69A of the Income Tax Act, where an assessee is found to be the owner of money and such money is not recorded in the books of accounts, the same is deemed to be the income of the assessee of the year in which it is found, if he is not able to explain the source to the satisfaction of assessing officer. Then, as per section 115 BBE, such income will be taxable at the flat rate of 30%. Flat rate, I am saying, even if somebody has income of 4 lakhs, he will not fall in the slab of 10%, but he will be, that addition under section 69A will be subjected to flat rate of 30%. This section was amended in 2012, financed by the Finance Act 2012. Under section 115 BBE, where the total income of an assessee includes any income under section 69A, income tax is chargeable on such income at flat rate of 30%. The remaining income is chargeable at the normal rates. So, if a person has got income of say 3 lakhs only during the year, 1,50,000 is salary and 1,50,000 is unaccounted deposits. He will have to pay tax on 30% at 1,50,000 deposited by him, which he is not able to explain. It will not fall under the slab of 10%, it will fall under the slab of 30% because of section 115 BBE. Now, this is a very important point which nobody should ignore. I think no newspaper have probably reported this matter. The justification for 30% tax is given in explanation to the Finance Bill 2012 as under: taxation of cash credits, unexplained money, investment, etc. This I am reading from Finance Bill Memorandum, etc. Under the existing provisions of Income Tax Act, certain unexplained amounts are deemed as income under section 68 69, 69A, 69B, 69C and 69D of the Act and are subject to tax as per the tax rate applicable to the assessee. In case of individuals, HUF, etc., no tax is levied up. In case of individuals and HUF, no tax is levied up to the basic exemption limit. Therefore, in these cases, no tax can be levied on these deemed income if the amount of such deemed income is less than the basic exemption limit, and even if it is higher, it is levied at the lower slab rate in the beginning. In order to curb the practice of laundering unaccounted money by taking advantage of basic exemption limit, it is proposed to tax the unexplained credits, money, investment, expenditure, etc., which has been deemed as income under these sections at the rate of 30% plus surcharge and cess as applicable. It is also proposed to provide that no deduction in case of any expenditure or allowance shall be allowed to the assessee under any provision of the Act in computing deemed income under the said sections. It is very clearly mentioned that this amendment will take effect from 1st April 2013 and accordingly apply in relation to assessment year 2013-14 and subsequent assessment years. So this is I read it from Finance Bill. So what is the section? The main section 115 BBE of the Income Tax Act and inserted by Finance Act 2012 is as under, where the total income of an assessee includes any income referred to in section 68, 69, 69A, 69B, 69C or 69D, the income tax payable shall be aggregate of A. The amount of income tax calculated on income referred to in section 68, 69, 69A, 69B, 69C or 69D at the rate of 30%. I repeat, at the rate of 30%. And B. The amount of income tax with which assessee would have been chargeable and his total income has been reduced by the amount of income referred to in clause A. That means addition under section 68, 69A, etc. will be reduced from the total income and balance income will be chargeable at the normal rate. So, but that amount of 69A, etc. will be taxed at 30%. Notwithstanding anything contained in this Act, no deduction in respect of any expenditure or allowance or set off of any loss shall be allowed to the assessee under any provision of this Act in computing his income referred to in clause A of subsection 1. I request all of you to read section 69A and section 115 BBE of Income Tax Act before you deposit any HD notes in your banks. Friends, government had given one advertisement on 11th November 2016 in most of the newspaper. I have got a newspaper cutting of Hindustan Times before me which said, you heard, your hard money is absolutely safe, don't panic. Deposit up to 2,50,000 will not be reported to Income Tax Department. It doesn't say will not be taxed. It will not be reported to Income Tax Department. There will be no harassment. Now, I think you please, everybody should read that advertisement again. It is mentioned that it will not be reported to Income Tax Department. But there are various other methods like PAN number, etc., under which income tax officer can come to know of these deposits. We must examine this advertisement in the light of Section 69A and 155 BBE explained by me. Now, as a result, if a person discloses such deposits, cash deposits in return of income for 2017, the same will attract tax at 30% under Section 69, as he is not able to explain the source. In addition, he may also be liable to penalty under Section 270A, treating as a concealment by misreporting, which may attract penalty at 200% of the tax. This is the interview. This has been stated in the interview by chairman of CBDT. I think penalty and prosecution is attracted if a person does not offer for taxation these amounts. In case, however, he himself discloses this deposit as his income in the return of income for 2017, assessment year 2017-18, and pays advance tax thereon in the financial year 2016-17. In my opinion, no concealment takes place, and accordingly the question of penalty should not arise in case of self-disclosure by the assessee. A doubt, of course, has been created by the interview of CBDT chairman, as I said. A doubt is also created by the official advertisement referred by me dated 11th November, in which it is said that deposits up to 2.5 lakhs will not be reported by the banks, and the honest citizen need not have any cause of worry. The advertisement, in my view, should not be taken as a blanket ban on the scrutiny and action in respect of deposits up to 2.5 lakhs. Even if there is no reporting, the department has means to unearth such deposits and take action, including for levy of penalty. There is an apprehension that government may come with retrospective amendment declaring such cash deposits which do not have proper explanation as deemed concealment. I don't think such an amendment is possible, or even if it is possible, it will be definitely questionable. In case a person does not declare such cash deposit in the return for 2017, the chances are his case will be selected for scrutiny. In case he is unable to explain the source of the deposit to the satisfaction of assessing officer, the same will be included in his total income, and penal proceedings can be initiated and penalty up to 2% tax can be levied if he has not paid advance tax, if he has not declared that as income. In appropriate cases, the department may launch prosecution proceedings in such cases. Again, I am submitting, provided he is unable to show the source to the satisfaction of income tax officer. Withdrawal can be made of amounts subject to monetary limits, can be used for any purpose as accounted income. Other possible consequences: there is a possibility of enforcement directorate, VAT, service tax authorities seeking information and initiating proceeding under the relevant acts. There is no immunity from action under other acts. Even if amount is below 2.5 lakhs, income tax department may be lenient, but other department can ask for the explanation from the depositors. Now, we know income declaration scheme got over in September. There the tax rate, in that scheme the tax rate was 45%. Now, if a person declares income voluntarily about the cash notes, whatever the amount he deposited in the bank, if he declares that amount as income voluntarily, the tax will be about 35%. And others have paid under IDS 45%. So there is an apparent anomaly in tax chargeable under section 115 BBE read with section 69A and IDS 2016. If a person exchanges old notes and declare that amount as income of the current financial year, then he will have to pay income tax at 30% plus cess and surcharge in applicable cases. If there is no penalty, those who have paid 45% under IDS may question the rationale of the rate under IDS. In my view, no penalty can be levied if the taxpayer has disclosed his income under section 69A and paid advance tax thereon. A possible course may be an order under section 119 directing such deposits to be treated as cases of underreported income instead of misreported income as per section 270A. In that case, the person will be paying 30% tax and penalty and 50% of 30%, that is 45%, which will be roughly equal to the amount payable under IDS. Since the imposition of penalty itself is questionable, to my mind the solution does not appear to be feasible. Some tax experts are of the view that income declaration scheme may be extended up to December 2016. In my view, that is also not possible. Efforts to circumvent by taxpayer. There are efforts to avoid consequences of possessing high denomination notes by many persons. And efforts are being made by many taxpayers to circumvent these provisions by way of investing in areas where acceptance of demonetized notes is permitted, booking of railway tickets with intention to get refund, buying gold, foreign currency, jewelry and other items from dealers who can show the sales prior to 9th November 2016. Dealers issuing bogus sales bills who are able to explain the source of the stock with them, looking for the persons with little income like servants or close relatives having exempted income, or somebody whose income is ab initio exempt like agriculture income. So people are looking for these people in whose account the deposits can be made. Some people have adopted the mode, they have repaid the loan outstanding purportedly prior to 9th November 2016. So they said either you take back the loan given to me or I will not be able to repay thereafter. Many people have paid property taxes in cash even after 9th because that was permitted. Assessees are clever, the department is also not lagging behind. Department has intensified surveys and searches to trace bogus and backdated sales. Department is trying to verify with the means of PAN, where applicable, who is the purchaser, seller. Department also trying to verify whether sales are backed by stock, whether volume of sale on 8th November is disproportionate to earlier sales of the vendor, whether buyers are genuine because of PAN number and other things. I think it is not difficult for the department to trace. So better one should be absolutely honest with the government. Deposits in small accounts opened under Jan Dhan Yojana are also under watch. Heavy deposits are made in Jan Dhan Yojana. Before 8th November, hardly any amount was lying, and suddenly after 8th November, many people have deposited huge amounts under Jan Dhan Yojana bank account. Letters are being issued by the department to charitable institutions to intimate the cash balance as on 8th November 2016. This is an attempt by the department to frustrate any manipulation. With the requirement of quoting PAN number in cash in case of sale of jewelry exceeding 2 lakhs, and also the excise duty applicable in case of jewelry, the detection of non-genuine transaction by a jeweler may not be difficult by the department. In the light of this discussion which I had, finally I would like to examine some different shades of cases. In the light of, first of all, in the light of government advertisement, let us examine following situation as per Income Tax Act. Number 1, housewife having zero income, whether the deposit up to 2.5 lakhs will be taxed. Of course, in my opinion, government will be lenient, but if assessing officer goes strictly as per the law, if she is able to explain the source, of course there will be no tax. But if she is not able to explain the source, 30% tax will be levied on unexplained cash as per section 115 BBE. Take the case of another working woman depositing 2.5 lakhs, out of which 1 lakhs can be explained by her as salary because all the household expenses were met by her husband. Now in this case of this lady, in the case of this lady, whether tax will be charged on 1.5 lakhs although her income is below 2.5 lakhs. In my opinion, again, yes, assessing officer in the light of these sections which I quoted can levy tax at 30% on 1.5 lakhs. He may deny the benefit of exemption slab unless the government becomes lenient and some orders are issued. Take the case of another lady who has filed wealth tax return, because wealth tax is now abolished, but as on 31/3/2015 it was very much in force. So she has filed the wealth tax return showing jewelry and only jewelry and no cash. What will happen? I think there also assessing officer may see her books of accounts, her withdrawals and source of income. If she is not able to explain accretion from 13/1/4/2015 to 8th November 2016, she may be subjected to tax on the unexplained cash. Certain amounts can be allowed but not more. So wealth taxpayers should be very cautious about depositing money in their bank account. Now finally, to conclude, I think in my opinion, demonetization will result in huge amount of deposit for the bank, which may lead to lending at lower rate of interest. The capacity of banks to support the trade will increase many-fold. The GDP will increase, tax collection will increase, and once the tax collection goes up, there is a possibility of reduction in the tax rate in the coming budget. The use of credit cards and debit cards will increase. I think use of apps like Paytm will also increase. Political funding will become transparent. I think the day is not far off when we will see UP and Punjab where the election will take place. I think the elections will show the use of less money because of demonetization. The present step of demonetization is likely to result huge benefit for the government, and ultimately the benefit will come back to public, the 125 crores. There will be hardship up to 30th December 2016 or maximum up to 31st March 2017. But I think we as a nation must be prepared to suffer that hardship and see that this measure is successful, and I am sure if we cooperate with the government, the country, the nation will become more prosperous. With these words, I thank you very much and appeal you to please cooperate with the government in the case of demonetization. Thank you very much.